Hello, everyone, and welcome back. Today, we are bringing you the 6th episode of FinCrime Insiders. I'm your host, Skylar Palmer, and I'm here with our special guest this afternoon, Michael Luxick. We're excited to be talking about all things financial crimes compliance. You can look forward to hearing Michael answer 5 questions ranging from details about his professional background to the difficulties he is experiencing in the virtual asset service provider industry. Now, before we begin here, I want to remind everyone watching or listening that the views and opinions expressed on FinCrime Insiders are those of the authors and do not necessarily reflect the official policy or position of their past, current, or future employers. Any content provided by our webcast, hosts, or participants are of their opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything. And now, without further ado, we'll go ahead and get this going here. Michael, I appreciate you for jumping on here with us this afternoon. I know it was a little bit of a hectic getting scheduling with your busy schedule and just with your profession in general here. But I'll go ahead and do a brief introduction for you, and then we can get going there. But I appreciate you for coming on here.
Awesome. Thanks, Kelly. Thanks for having me.
Yep, great. All right, so Michael, so your title right now is Director of Compliance, and I believe that's a newer title that you assumed here recently. So can't wait to hear more details about that. You are currently at a money service business institution, but not just any money service business. It is a crypto money service business. So this will definitely be a hot topic, and I'm excited to hear more about those details. And I know that in your role, you lead a team of associates and analysts, and the associates perform some KYC, CIP measures, and then the analysts are responsible for conducting transaction monitoring, blockchain reviews, and those types of things. And also in your new role, you're kind of managing licensing, the MTLs, the money transmission license applications, ensuring that your institution is up to speed in the regulatory compliance sector. And with that, can you just walk us through your day? What did the scope of your responsibilities look like? And kind of just from start to finish on a traditional day, more so on like the investigation side of things.
Sure. Thanks for kicking it off, Skylar. Yeah, I'm the Director of Compliance at a digital currency machine company as well as an over-the-counter trading desk. I oversee the day-to-day operations of the compliance department. A typical day, we don't actually really have one. We could be hit with a subpoena at any time, and all hands need to be directed elsewhere. So in this space, we all know it's pretty hectic, but overseeing the day-to-day operations of the entire department is the scope of my role.
Yeah, awesome. Now, so you say you hit a subpoena and then you address those, certainly with some sort of incentivization behind it. But what does more of like the traditional flow look like, as far as the ongoing type monitoring and investigations?
Sure. So we have our own engine rules built into our programs, obviously, for transaction monitoring. If those rules get hit, depending on the severity of the rule, I'll conduct the investigation. So primarily for our private client desk, where they can do up to $1 million in trades a day. I do the wallet screening for those customers. We also have them sign attestation forms. So we have a lot of we have a rigorous process in place to protect our private client desk from scammers. So that's one aspect of our investigations that I oversee. And then typically anything to do with FinCEN related requests. And yeah, just working each day as a new day with regulators, submitting the documentation for them.
Yeah. Awesome. Well, sweet. Appreciate you for giving us that little insight into what goes on in your world there, and just your professional background. Now, like I kind of mentioned, I believe I saw this on LinkedIn at least, or you mentioned to me previously during some of our discussions that the Director of Compliance role is new, right? You kind of assumed that a few months back.
Yeah, so I was recently appointed to director of compliance about 3 months ago. Prior to that, I was the compliance manager, and then my start at this company was a senior compliance analyst. So I
Awesome.
started in the trenches doing transaction monitoring, writing reports for FinCEN, the whole nine that goes with investigations. Then I moved up to manager, overseeing a smaller team of analysts and assisting with the investigations there. Moved up to director recently, and now I'm overseeing the entire department, and it's a interesting day every day.
Yeah, awesome. All right, appreciate it. We'll go ahead and roll on here then to question number two. Now, can you give us some insight into what kind of trends you yourself, your team, or your institution has been noticing? This is certainly be obviously it's gonna be specific towards crypto. Uh, that's the nature of the business that you're in. So, can you divulge into that a little bit with us?
Sure. So, trends we're seeing, I'd say the biggest trend we're seeing right now is an increase in pig butchering scams. Um, Most of these scams stem from romance schemes and elder abuse. We see Facebook to be the most common place where these compromises happen. Um, and then we do a lot to mitigate these risks with new policies, procedures. We work directly with law enforcement. We have the attestation form and scam warnings. We also post scam articles on our website as well.
Yeah, awesome. Yeah, that the pig butchering is definitely a a very prevalent term used recently as far as in the realm of fraud and scams going on. Now, uh, how are you noticing that at your company, your institution? Like, what does that look like at your company?
Sure. So, consecutive same day transactions is a big red flag. Um, Obviously, scammers like to coerce the most funds out of them as soon as they can. And then we also see in our kiosk footage, uh, people are on the phone while they're conducting these transactions, and 98% of those people we found to be scam victims.
Yeah.
So, one of the biggest indicators is going to be on the phone conducting the transactions, while the scammers walking them through it.
Oh, okay. Yeah. So, prominently then occurring at the ATMs then, right? Being instructed by the scammers to deposit the funds, purchase the Bitcoin.
Correct. And then I wouldn't say there's a trend to it, but we do see from time to time over the counter trades because the wires go up to $1 million. We do see scams happen there as well.
Yeah, yeah,
And that leads us to one of the biggest challenges, which are banking partners. Obviously, Bank TradFi likes to de-risk, and they see our industry as obviously a very risk on.
yes.
So when we have these private client desk customers initiating clawbacks with their banks, we do end up in a tough situation with our banking partner, which leads us to um, seek other partners.
Yeah, yeah, most definitely. Earlier on, one of our first episode, or one of the first ones we did on FinCrime Insiders here, we were talking about de-risking trends. A lot of it is affecting just average consumers, right? Because the way that people move money now, those that money movement causes a lot of the traditional red flags as far as transaction monitoring, things like that. Right, peer-to-peer transfers. There's just small micro deposits, stuff like that. But it's pretty common now because that's kind of the average consumer is to split a bill using Venmo or something, right? So you're getting 10, 15,
Mhm.
$20 like. So depending on how you're looking at it, like that can fall in the spectrum of drug deals, or sports betting, I guess, is huge right now too. But I can definitely see how the de-risking impacts your institution specifically, as far as how you guys just try to run your business. And then, unfortunately, there's no such thing as no risk. So there is going to be instances of where it's out of everybody's control. Really, all you can do is just try to uh, create more controls, right? Put more controls in place, and then make sure that you're following up accordingly with appropriate reporting and things like that. So I definitely understand.
Right, definitely spot on there.
Yeah. All right, cool. Yeah, appreciate it. We'll go on question three then. Now, do you have any interesting investigations that you can talk us through here? Kind of how it unrolled. Maybe it was something that was just like a system generated type alert from your monitoring system, or was it referral? Or I mean, you hinted at video footage from the ATMs. So like maybe there's just something interesting there that you can speak to.
Definitely. One thing I mentioned from question failed to mention from question two was the question if there was any ad hoc monitoring we had to do.
Yeah.
So one caveat to that is New York residents. So we have a trend in New York residents uh, going to New Jersey to conduct transactions
Uh,
because there are no machines in New York. New York has a rigorous application to obtain a bit license to be able to uh, can run the kiosks in
yeah.
those states. So New York was definitely an ad hoc rule we added to the engine.
Okay. Yeah. Yeah. To keep an eye on maybe that cross border transaction. Like, did you think it's like? I guess how are you able to mitigate that? Then is there some sort of CIP process when they go to the Bitcoin ATM? Like they have to scan an ID, and then if it has a New York license, a New York address, then they're not allowed or something.
Correct. So as soon as an New York ID is scanned, our systems are the rules are triggered in our systems and they're blocked from transacting. Correct.
Okay. Yeah. Nice. That's definitely interesting. It's nice to hear those types of things that that companies such as yours have to go through to increase those measures. I mean, I think New York's very special in crypto industry in general, right? They definitely are making it a like you said a rigorous process to get operations in there. Which I mean, for better or worse, it's yet to tell. I
Right.
guess it just makes it more difficult for the smaller fish, right? To get through it all because maybe the fees associated to just getting it all set up outweigh the cost effectiveness, right? Profits.
Right. Definitely.
All right, cool.
So now going back into your interest in case I have an interesting one for you. So it is a pig butchering case. It was an elderly gentleman using our private client desk. And these were over the course of about 4 weeks. He performed four transactions once a week and one for the maximum daily limit of $1 million a day in Bitcoin. Um, what tipped us off to this being a pig butchering scam is that we had our CCO give him a call and found out that he had the intention of liquidating his entire savings, which led us to investigate this further. We send attestation forms as well as a questionnaire to private client desk applicants. And when we see these red flags and the communications were full of syntax errors, such as the emails, and he claimed to be an intermediate trader, but at the end of the investigation, it was clear after looking through chain analysis, seeing the destination of funds being Guobi, a nice foreign country. It's obvious to see that the elderly gentleman wouldn't have been sending to a foreign country. So after imposing a waiting period on him for his next trade, what happened was the scammers actually convinced him to buy gold bars, and these scammers flew from I couldn't tell you what country they came from. I can't recall at the moment,
Yeah.
but they actually flew here physically, came to his house and picked up the gold bars. Uh, Luckily, the elderly gentleman's daughter caught on to something being wrong, and during the second pickup, where they were supposed to pick up another set of gold bars, she had already tipped the police off and they're waiting there. And it was essentially a sting operation with the total report exceeding $4 million of loss.
Man, yeah, it's obviously unfortunate to hear, and there's so much that goes into it, right? It wasn't just like one day that the victim picked just decided to send all this money over, right? It was probably a
Right.
lengthy, a lengthy time of as they call it, right, fattening the pig butchering. where the scammer's putting in all that effort to build that trust and whatnot. Do you know what he thought he was doing? Did he think he was investing in Bitcoin?
Yes, so this was an investment scam.
Yeah, yeah,
He was very elderly, and with that being such a vulnerable individual, he fell victim to an investment scam that was confirmed in chain analysis.
yeah, yeah. Makes sense. And the attribution already being on there in chain analysis helps a lot. Now, do you know if the website was still operational for a while, or is it still going? Um,
No, so after the fourth trade conducted, the website became deprecated, you could say.
okay, yeah, yeah, all right, yeah. That's definitely neat. So this was something you said that was kind of just a system generated alert due to the consecutive uh, max dollar amount purchases.
So the way that we handle private client desk, it's a white service. So we're handling communications via recorded phone calls or email, and we have a different process than using the kiosks. So that's where we received the email communications, started noticing the errors in the emails. For being an immediate trader, you'd expect to see um, some crypto language used, and you could tell that there was no knowledge of crypto prior to the emails.
Oh, okay.
So the email started it, and then the largest tip was obviously his daughter calling in to our customer service line, thinking something was wrong,
Yeah.
which then led to the extensive investigation, and ultimately the two scammers were arrested by police on their second gold bar pickup.
Yeah, man, that's incredible. It's definitely a unique story, and I guess you all have a unique perspective, like you said, is a white glove service, right? So, actually executing these services, it's done via communication, correspondence, one way or another, uh, which gives you that perspective. But I think it's actually cool how you mentioned specifically the lack of knowledge and lingo related to these to the correspondences as a red flag. Now, what do you know? Also, like, what was this like a new account, right? Relationship, and then like immediately they started executing these trades with y'all, and then on top of that, the lack of knowledge, like you said, is probably just kind of all came together as one, huh?
Right. We did impose waiting periods between each trade of a week, to give us time for the funds to move. Typically, if it's a scam, the funds move instantly, so we can see that in chain analysis.
Yes.
So we do check the destination of funds. Um, in other words, we do a periodic wallet screen for private client desks, to make sure the funds are going where they're intended to go. Otherwise, it leads us to conduct an investigation.
Yeah. Okay. Yeah, that's interesting. And I mean, now that you mention it too, actually, that's pretty common across the industry as far as having a set dollar amount have to be held for X amount of time, which is also kind of funny because that kind of is contradicting to the whole blockchain technology in general, right? You're like, wait a minute, I want to send this now, right?
Exactly.
But there are these fraudsters and people out there that abuse the system. So that's what to protect the consumers, right? That's what has to happen. So I mean, it's
Right.
and if you're an early adopter of blockchain technology, I'm sure you're irked by it, but unfortunately, that's kind of where we have to go with it if we want it to continue to grow, right? In the United States, especially, there's got to be some push and some give, right? Some areas you may be able to flex a little bit greater than others.
Exactly. Yep. There is customer friction. There's a necessary point of customer friction that has to occur in the best interest of the customers. For example, if you walk into your bank and you ask to withdraw $1 million, they're going to have questions for you. And
Yeah,
in my opinion, I would hope my bank asked me questions if I was pulling out that much money. I'd
yeah.
be a little bit alarmed if they just willy-nilly handed it over.
Yeah, right, right. But I mean, some people do. I mean, people are just like to be private, right? It's my money. What does it matter what I do with it? But then again, it's like, hey, if this question is going to save you $1 million, then then maybe they'll come back and apologize afterwards. But I don't think it's been done that way yet. I think they still leave, pissed off or whatnot, regardless.
Right. Yep. Yep. They certainly do.
Right on. All right, cool. Well, that's definitely an interesting investigation. I think is one of the better ones we've had so far. Now we'll move on to question 4 here. In regard to your experience, it could be in this industry specific, or something from your previous experiences. What is an issue or obstacle that's impacted you, your team, or institution the most in regard to your ability to complete your routine responsibilities? Just effectiveness and running a department, a compliance department, or just doing compliance activities.
Right. So I guess there's three major elements to this. Um, I'd start with the one of the largest challenges I mentioned before is gaining banking partners, um, with the large risk that we pose to their traditional systems. We go through banking partners quite often, and it's tough to maintain those relationships. Regulatory guidance is also a very touchy subject given the ambiguity. Um, we do receive, as I mentioned before, subpoenas, which, in my opinion, are civil fishing expeditions. But that's just my opinion.
Yeah.
For example, we just had a state request over 1,400 separate screenshots of kiosk footage,
Wow.
which took the team off operations for an entire 2 weeks. Every day was spent collecting screenshots of these kiosk footage photos, naming them, Bates numbering them, and then getting them all sent out in a zip folder to the state.
Man.
That was one of the largest burdens we've experienced so far.
Yeah, yeah, that's definitely unique, no doubt. Do you know the purpose between, at least like the what you think the intentions were for requesting those pictures from the kiosk? Like, was it related to any of your license requests or trying to obtain a license or something?
So it has to do with maintaining a license. Right now, the states, like I mentioned, are very indecisive in how they're handling this new industry. So this isn't the first time we've had this large of a broad general subpoena before. Um, I couldn't tell you what they're doing with 1,400 kiosk photos.
Yeah,
Um, it's again to me a civil fishing expedition. We've also seen it from Washington where they request information that really doesn't pertain to anything they need to know. But again, it's There are civil fishing expeditions, um, where my hope is that they're trying to understand the industry,
yeah,
to place the correct, how do I want to phrase that? The correct regulations in place to properly manage this industry without just tossing us to the side and
yeah,
shutting us down.
or yeah, completely just blocking you, right? Like blocking your business growth, right? Kind of like, yeah, you can
Right.
operate this, but you have to follow these rules, and you're like, well, wait a minute, that I can't operate then.
Exactly right. Yep.
Yeah. Oh, nice. And the banking partners, and we talked about earlier too, and you brought up here again as far as one of the obstacles you face. Now, traditionally, you probably had previous partners, or this industry previously has had partnerships with, uh, Silicon Valley, or I mean, New York Community Bank. I feel like is one, but they had to sell their whole entire booklet related to that. But these recent institutions, that tailored towards this industry, that have gotten either they've closed down or been acquired by large institutions, and then the whole de-risking has applied directly to these types of high risk activities, right? That it's called novel activities, is how the regulators quote it as, right?
Right.
So you have to jump through so many hoops in order to prove that you have uh, controls in place to manage the risk and then get basically the blessing from the president of the United States almost to tell you that it's okay. So previously those banking partners were all into it, right? They were embracing it. But there's been new stuff that's came out recently too, as far as how lackluster compliance programs were at these banking partners. Because in my opinion, I think that the downfall is that um, either the crypto industry, the crypto company maybe is new, right? And they're not really familiar with compliance or anti-money laundering investigations. And they don't even have like a chief compliance officer. Or if they do, he's also the chief revenue officer who's supposed to be making money. So which side is he going to go on, whenever it comes to
Right.
spend money or make money, right? So there's definitely those pitfalls there. And then also, um, from the banking, like finding a banking partner who's willing to accept the risk, is because when the regulator comes by and they ask them what they're doing to mitigate the risk associated to that industry, instead of, I guess, explaining or educating them on what it all means. Just because you have crypto in your name doesn't mean you're running crypto through that bank, right? Um, so it takes a little bit of education, and then also it takes just complete honesty from the bank standpoint of, well, just because crypto company X has a compliance department doesn't mean that you don't have to run compliance on their transactions. Or I feel like there's a lack of communication transparency, because one of the two will rely more heavily on the other in that relationship, right? Well, if they're collecting KYC and CYP, then I don't need to collect KYC CIP. So I guess the big term now too is know your customer's customer. So that's probably a big issue too, right? Maybe you can speak on that.
Definitely. Yeah. So know your customers is definitely an issue. Um, with the nature of blockchain, um, and the nature of our our risk tolerance versus traditional finance, our daily thresholds and KYC requirements can be lackluster for some banks. So for our basic tier onboarding, you don't need to provide any KYC um, except your name and phone number. You could falsify your phone number and address if you really wanted to.
Yeah.
And that gets you up to $9,990 a day. So that's one of the biggest challenges is that if we don't know our own customer, how is someone else going to know the customer?
Yeah. Yeah, most definitely. So, do you see improvements being made then on that side of things? Maybe what once was, as you described, that you asked for just basic CIP, but now you're requiring like the picture ID to have an address or in a picture. Or is there like an option to disclose the purpose of using said Bitcoin ATM?
So we're definitely putting more controls in place. It's been an initiative of ours to implement everything we can to do stay compliant and satisfy our banking partners' requirements. I think one of the other big challenges banks don't like about it is that um, they need your money to make money. And in our industry, as soon as fiat hits the bank account, it comes right back out into Bitcoin to keep facilitating business operations. So there's
Ah,
never a high balance kept in the account.
yeah, yeah. Okay, that's definitely, yeah, a pitfall there too, huh? Just um, banks not able to use those benefits. So, for your instance, since your experience, you guys run it's Bitcoin ATM kiosk, and then you have the over the counter service. So you're using maybe portion of the proceeds from the fiat deposits to acquire more crypto assets to manage that over the counter desk.
Right. So it's to ensure business continuity. So it's going to be two separate bank accounts. We have a bank account for daily operations with the kiosks, and then we have a bank account for private client desks, given the two stark differences in the limits and the risks they pose. So, does that answer your question?
Yeah, yeah, yeah. That's just yeah. I guess well, because you mentioned that the funds typically exit these deposit accounts at an institution for to go to Bitcoin. Are you, as like the reserves are held in Bitcoin? Then is that what you're saying?
Oh, I see the question. No, so our liquidity to facilitate more trades at our kiosk. So it's a revolving door, you could say. As soon as the funds come in, Bitcoin's bought and held in our custodial wallet that
Yeah.
supplies the kiosks.
Ah,
If it's
okay. Yeah.
for private client desk, it's a whole nother
All right.
arm of the business.
Yeah. That makes sense then. I guess I never really thought how that works with the Bitcoin ATM. I guess it's a lot like a traditional ATM. But yeah, except you're not taking cash back out to put into the ATMs.
Correct. And then we just launched an initiative that should be coming out within the next couple weeks that you'll be able to purchase and sell Bitcoin using your debit card.
Oh wow, really?
Yeah.
What did you have to do before? Like kind of create an account? Um,
You'd have to visit the kiosks and create an account from there.
okay, yeah. So this will then you won't need cash necessarily, and then you won't have to register an account. You can just use a debit card and have put in a name and email as you noted.
You'll still need to create an account. It's just another addition to fiat,
Okay,
another
yeah.
payment method.
Is that something that is like across the industry, kind of an incentivization? That's what folks are looking for.
It's definitely new to the industry. So we'll be one of the leaders in that space, offering more diverse services.
Yeah,
Because right now, another problem we have are the ATMs being single feed machines. So you have to sit there and insert every bill one at
yeah.
a time. And when your daily limit's 75,000, you've got a pretty heavy bag of cash on you, and you're sitting there for quite some time feeding that ATM.
Wow, yeah. Man, I can only imagine somebody walking into a convenience store or grocery store or wherever you have these at, and with a bag of cash, man, that sets off all sorts of, of alarms.
Definitely, yeah. We try to get those customers over to the private client desk as soon as we can.
Yeah, yeah, that makes sense. Awesome, right on. Well, I appreciate you, explaining kind of the hoops you got to jump and the roadblocks that you face in the industry here. I'll move on to question 5. Can you describe how you got into the financial crimes compliance career field, and what tips would you recommend for those looking to get into the field? I mean, maybe even more so into crypto, digital currency industry. I know it seems like highly sought after, and a lot of people love fintech in general, financial technology. So
Definitely. So, this ages me, I feel like, even though I'm still pretty young. But a decade ago, I went to Florida State University, where they have the number one criminology program in the world. So I studied white collar crime was my focus. Um, and after that, I got my foot in the door at a startup, fintech startup. It was a payroll company named Gusto, which is now, I believe, a top 100 cloud company.
yeah,
I started in customer service there. Um, After about 8 months of working customer service, I was promoted to the risk and compliance team, where I started learning the ins and outs of fraud as well as compliance and anti-money laundering. Um, After Gusto, I spent, let me back, I spent about 2.5 years at Gusto on the risk and compliance team. And then I began to work at Robinhood. This was pre-IPO, so they were still a startup at the time. I worked there as a senior financial crimes investigator, which is a bit ironic given the fine the SEC gave them for uh, illegal activity.
yeah,
Um, a little oxymoronic. So after the Robinhood IPO, I moved on to start my own consulting firm for AML and compliance programs specified towards blockchain. I was running that under Selfish Crypto. So I did that for about a year and a half, freelancing and consulting. And then I found my way into the digital currency space, as well as over-the-counter trading, where I worked, like I mentioned before, from senior compliance analyst to the compliance manager, now directing the compliance department. Um, Throughout this time, the biggest thing I focused on was learning. I wouldn't say the biggest thing I focused on, but continued professional learning, whether it be webinars, virtual FinCrime summits, or in-person conferences, and obtaining certificates, such as the Certified Cryptocurrency Investigator certificate from the Blockchain Intelligence Group, which I'm a member of, and just continuing to engage in any networking events you can find is a great avenue. Um, and I think LinkedIn is one of the best places to do that. Um,
Yeah.
and for me personally, this year I attended Bitcoin 2024, so I had the chance to meet new people as well as see old friends from other conferences. It's always fun to see someone that you don't often see because they're overseas in another country.
Yeah.
So that's always great for networking. And then I'll be attending Coinverse Summit in December. I try to do as much networking as I can in the industry as well as education.
Yeah. That's awesome. Right on. Yeah, that's definitely a good thing. So, but after your higher education, and then you it was the Gusto just opportunity, was that kind of just like it was just like a first job type thing, and then you didn't even know where it was going to go?
Oh, no, so I had the risk program in mind. Both jobs were open at the time that I applied. I just happened to be selected for customer service, so I had to start in the trenches there with all those lovely phone calls.
Yeah, yeah. That customer service is definitely a unique and treacherous industry.
Yeah, most definitely.
Yeah. Well, so and it sounds like so you've been in financial technology or startups, kind of non-traditional compliance this entire time. So that's pretty unique. Um, and I assume you plan on staying in this side of the verse for a long time. Uh, but as it's evolving, I mean, as you mentioned, right, you were at Robinhood pre-IPO, and then they got slammed with the fine, not long ago, for failures in the anti-money laundering, BSA compliance department, stuff
Mhm.
like that. So I'm sure you probably noticed a shift in the type of compliance that's being run within these organizations, especially in financial technology and crypto.
Right. They've definitely gotten more rigorous. Internal and external auditors, they want to see um, pristine record keeping. I'd say is the number one driver there, as well as a strong anti-money laundering and compliance program. So we put a lot of time and effort into the procedures and policies we have in place.
Yeah.
Um, yeah.
How
Yeah.
frequently are you updating those? Annually?
Oh no, we're updating these I'd say weekly, but that might be a stretch. I'd say on a monthly to quarterly basis, depending on sheets, miles, etc.
Yeah, yeah, and emerging risk, right? That's why the policies procedures are built in that way, because what was prevalent 2 years ago probably may not be impacting your institution as it once was, or it just never actually impacted your institution, right? I mean, FinCEN provides guidance along a lot of these things, so maybe you want to include it into your policy and procedure, just to be sure. But then maybe it adds just more responsibilities that actually aren't actionable to the process, and maybe you fine tune it, refine it, or just eliminate it in general. So I can see that. So it's funny because like traditional finance, I feel like these institutions, they're like it'll be a policy in place for like 5 years, maybe 6 years. Who knows? And then there's just like a lot of desktop guidance stuff that like doesn't have to be approved by so many stakeholders. So if there is like a minor alteration to something, then it's just like a revised desktop guidance document.
Right. Yep. And we always note that in the version control. Our version controls are pretty lengthy nowadays.
Yeah, yeah, I'm sure. I'm sure. Well, so how many states are you guys in?
We're currently licensed in about we actually had a meeting on this today. I should know it off the top of my head. We're currently licensed in 17 states, and then we have applications out to 8 more. Um, so we're working on getting to all the states, but it can take anywhere from 3 to 6 months to hear back from a state's application. Sometimes there's more requirements or documents we need to supply after they've reviewed that. So a 6 month response, then 2 months on our end to get the documentation together. It could be an example of how long it actually takes to obtain these licenses.
Oh yeah, yeah. Well, it's definitely interesting. It's good to hear all this insight into that industry, especially with the current climate around it. It seems like there's been little wins here and there this year, right? I mean, with the launch of both the Bitcoin and Ethereum ETFs, spot trading, um,
Yeah.
and even staking, really, right? There was a lot of 50-50 of whether it's going to be considered, securities XYZ type stuff, and then it kind of
Hmm.
seems like that fell through there. So it kind of seems like that's working out in the favor of the true blockchain enthusiasts. Give it. I just had a conversation earlier today about staking, and I was just like, it's basically just giving the power to the consumer. In retrospect, because it's the same thing that banks do, except you're only earning 1% on your own money that you have at a bank when the bank's making 6, 10, 15, 20% on your money, right? So if it's
Right.
staking, crypto, it allows the average consumer to earn that interest on their assets.
Oh, most definitely. I have lots of crypto staked. I'd
Yeah.
say Solana is probably the largest stake that I
Oh,
have.
oh
But
yeah,
yeah,
yes. Solana's big in the industry. Sweet. All right, awesome. Well, yeah, that's it for the questions here. Let me pull this back up real quick. And now both Michael and I are on LinkedIn. As Michael hinted, he's definitely a big believer in LinkedIn, being able to network, build out his network, connect with folks like-minded in the industry, and just also being able to share thoughts on a lot of these topics. I know Michael's picked up on it a lot recently. I've been seeing that you've been contributing to some articles or the opinions on there. So I personally don't mind being cold connected, is what I call it, right? Shoot a connection request over if we have similar professional experience or things like that. And I know Michael, same thing. That's kind of how you heard about FinCrime Insiders, right? It was on LinkedIn, and you just reached out, and I was like, yeah, something happened.
definitely, Scott. Yep, I'm an open door.
Yeah,
Love to connect with people like yourself in the industry, and it always presents interesting opportunities. So I appreciate it.
yeah, definitely. And then last but not least, we'd like for everybody to like and subscribe to FinCrime Insiders on YouTube. You can find us at www.youtube.com at FinCrime Insiders. And you can also visit our website where we do have the audio files of these episodes on there if you want to listen. We're also on uh, SoundCloud too, whichever platform you want to use there. But we grew a bunch in subscribers from the last episode to this one. I think it was over like 50 or 60. So people were enjoying the sanctions content. Hopefully this one here, everybody's going to enjoy the Bitcoin, the money service business industry, and hearing the ins and outs of what Michael's been up to and his professional experience. But that's the conclusion of episode 6 of FinCrime Insiders. Thanks, Michael. I appreciate it.
Thank you, Scott. I appreciate the time.